That was philosophical.
So that's what keeps me going every day, bro.
That was like something you read out of a book. It is. Anyways, guys, I'm gonna give you guys a quick breakdown of the P&L, and then also have the trades listed. So we'll go over everything here, and then here's the actual trading account itself as well, which this is on TradeLock, and I've been trading on TradeLock. You guys can see the deposit there, which I also have a secondary account, but I'm not gonna go over that account today. And then we have the trades over here. These are the first trades that I took. You guys see the live account there as well. And you know what, I've been trading with TradeLocker for quite some time, and honestly the platform is pretty great. It's like if MT5 and TradingView had a baby. So if you guys are also interested in trading on TradeLocker and you guys want to check out the platform itself, I'll have a link down to the description to the brokers that I use to trade on TradeLocker. But other than that, let's get right into the video. I know you guys are very interested. I've been getting a ton of DMs since I made that story post to make this video and have it done and ready. So let's get right into it. What's going on, guys, and welcome back to another video. So first and foremost, before we actually get into this video, I want to let you guys know that the way I'm actually trading right now is very risky, and I'm taking on a lot of risk with these positions and these trades. So to give you guys kind of like a quick disclaimer right on this position, when I all of these trades, when I deposited the money into the trading account, I knew that there was a great chance that I had a possibility of seeing a very high drawdown or possibly losing every single cent in the trading account. And I don't want you guys to think that these types of results are typically very normal with this type of capital, the type of risk that I'm trading, because on average right now I'm risking about $10,000 a trade, which normally if I was taking a little bit lower risk and trying to find a more consistent and sustainable approach, I'd probably be risking with 110 grand anywhere between $3,000 to $4,000 on a position really looking for 2R multiple. I've literally doubled the risk in these types of trades where I'm actually risking $10,000 looking to gain $15,000 to $20,000 per position to try and build up as much cushion in the trading account. Just wanted to give you guys a little bit of a disclaimer there, because these types of results typically are normal, and I wouldn't expect for you guys to do exactly the same as I am, because then typically you'll fall into a different type of fallacy. So I just kind of wanted to give you guys that little bit of a disclaimer, because I don't want you guys to unfocus yourselves and try and start flipping accounts and it not go well for you. I want you guys to keep in mind that typically on average should be risking anywhere between maybe 1% to 3% depending on your type of risk tolerance, and really it's all subjective, up to you. So my goal with this account is to try and make as much money in as little time as possible. So now with this account, my net P&L right now is $97,000. We have a 66.67% win rate, which typically is a little bit higher for me, but that's just because my average risk reward is lower. It's at 1.3. On average, I'll have anywhere between like a 50 to about a 60% win rate with around a 2R multiple. It just really depends on the market conditions, but a lot of these trades I did end up taking scalps on these trades, and I had some fairly sizable losses, which we'll get into right now as well. So if you look at this, we'll look at the calendar first. So when I started this last week when I was in Italy. So if we look at this, right, it's been roughly around a week worth of trading, a little bit over a week worth of trading, which I didn't trade every single day. You see, I'm trade Monday, traded Tuesday, Wednesday, traded Tuesday, Wednesday, Thursday, and then Tuesday and Wednesday this week. I didn't trade on Monday of this week either. So if we look at this, we actually only have one red day, which is pretty great, but this red day was actually my biggest losing trade, which I actually recovered from. So we take a look at some of these trades. This was the very first trade that I ended up taking, which I ended up taking a bounce play here on SPX, which was a huge R multiple position. So this trade I had cut so short because I was targeting these lows all the way down here. And this is actually a trade that I had called out on my Discord as well. I was targeting these lows all the way down here, but because it was like that psychology of having a fresh account, already being in profit, wanting to secure cushion in the account, I ended up closing super early. So as you guys can see, I was risking $9,000 to potentially make $65,000 at a 6.5 R multiple, which would have been absolutely amazing. It would have been huge. And this is kind of what the trade looked like at that point in time. As you guys can see, I was aiming for these lows over here, and I secured it so early. I mean, I only made a 2.5 R multiple, which is good. It's basically a base hit, but that's not essentially what I was looking for. So you guys see the mistakes I made. Closed my position too early, saw some rejections to the downside, and decided to close the trade. What I did great on was not getting greedy, taking profit, securing a positive R multiple on the trade. And next time I can just try trailing my stops down to TP, which, I mean, 65 grand on one trade would have been huge for this type of account. So let's go back to the actual trade log itself, so we can look at all of the trades that we have here. So I ended up losing $9,000 on the next trade, $10,000, $13,000 gain, $8,000 gain. Then here was the losing day. So all of these trades were taken on the same exact day. Started off the day losing $15,000, which is roughly a 1.5 R multiple, which at that point in time, I was okay because I just had a huge $24,000 day followed up by another $25,000 day. And then I ended up losing like $16,000 with commissions. And then if we look at that, I took another trade after, and notice that I'm trying to just short the NASDAQ the entire time. Like all of these trades were just shorts, and these are the 4 trades that I took on the 1st of August. I was consistently just trying to short the NASDAQ, and the problem was I was very married to sells, and I was holding my losers for a lot longer than I wanted to. As you guys could see, there was a $24,000 loss here after the $5,000 win, and I decided to take the short one more time, where I did actually size down on this position, and I just caught a lot larger of a move, because if not, then I would have basically been almost a break even on the trading account. And I did end up making a little bit of money on this position overall, but on the day I ended up still losing like $4,500. So the real mistake that I made over here is I really should have just called it after that $24,000 loss. These are the rare situations where kind of the over trading does save you, but I want you guys to keep in mind, like, this was a mistake trade. Although I made money on this trade, it was still a bad trade in my eyes, just simply because I over traded, and I was able to just manage myself very well on this 4th trade, and that's basically when I called it a day. Moving on to the next day, practically a little bit of a break-even trade where it was $600 loss and followed up by $22,000 win, $4,500 win, $7,000 win here as well. Then we have 2 losses here for around $8,000, which was the other trades that I ended up losing money on, but I still ended the day in green, which, as you guys can see, this was all today. And then I ended up taking a $10,000 win, $16,000 win, and then a $4,000 win. So again, keep in mind, guys, for the majority of these trades, I'm risking around $10,000. So some of these trades that you see that's a little bit smaller of a win, like this $4,000 win, I did end up sizing down on. Same thing over here, size down, I sized down, just trying to build back some cushion from this loss, and really just kind of build my confidence back up after this huge losing streak that I had. I wouldn't even call this a losing streak. I would just say these are 2 just big losses that I let my emotions kind of take over, and I ended up losing in total roughly like almost like 40 grand is what it looks like there, which is pretty crazy, because I was still able to recover from that and on that same day and hold my trade very well and execute on that. But as you guys can see, I mean, I go through these losses as well, and it's not necessarily the loss, but it's how you can recover from those losses and how mentally prepared you are to recover from those losses, and knowing yourself, knowing when you should call it and when you should be able to continue to trade. So this was kind of a trade that I was very confident in, this $30,000 trade that essentially recovered all of this loss, and I only ended up having a red day of like $5,000. But still, it's one of those things where you just have to keep in mind, like, it's like, okay, well, you know what, I'm in a losing position. How do I feel about the current situation that I'm in? Am I still in a logical state of mind? And to me, you know, I've seen bigger fluctuations in my P&L, as you guys know. Like 2 years ago, you guys can go back on my YouTube channels and you guys can see the 100K days that I've had, where I literally also show you the crypto withdrawals as well, leaving the brokerage, landing in my crypto wallet, right? I've seen crazier fluctuations in P&L during those days. So losing this type of money, although on this specific account was a little bit of a sting, it wasn't something that I was going to lose sleep over with, because I knew what I was getting myself into before the challenge actually started. So going into the actual setups themselves, how am I actually trading? Why am I taking some of the trades that I am? And how am I actually able to really try and get like those base hits? So when it comes to trading, again, my trading is exactly the same. I'm still using order flow, and on top of using order flow, I'm still trading with my major zones being the key levels that I find on the daily, the 4-hour time frame. So kind of going over today's price action, looking at today's price action, I did want to see shorts. A lot of people were looking for longs, but I did want to actually see a continuation on this bearish trend overall on the daily time frame. The NASDAQ, as you guys know, has been dumping for the last few days, and price action did actually start to pull back into this key level here, which if we go down to a 4-hour time frame, what we could see is we have a previous range of support and a previous range of resistance here at this area. And I marked it off here because if we look at the previous trading day, price action came up into this area and had a big rejection, and it moved back down. So when it came to this trade, essentially what I was looking for in the morning was, okay, well, if we could find a break and retest opportunity, then I'll look to take some longs, which price action broke through this key level. I was looking to short it here first. It broke through this key level, pulled all the way back, gave me a little bit of a bounce, and then that's when I decided to execute myself on a long, looking for price action to come back up into these highs. Now I am also trading off of the 1 minute time frame. So if we look at the structure here on the 1 minute time frame, the structure is a lot cleaner because I'm looking for really quick trades. Again, I'm using big size, looking for those quick trades, looking for that quick 1.5 to a 2 R multiple, kind of at most. Now, I did try and hold some longer term trades, some, let's call them swings, because for me, like a 2-3 hour trade is pretty much a swing trade for me, although it's not considered a swing trade. So in this type of situation here, this is one of the trades that I ended up taking today, which is over here as well. As you can see, it's a $4,000 winning trade, which isn't the greatest, but I was really looking for shorts here, but I ended up taking this bounce play, or this break and retest here at the 53.41s, which I want to give you guys the breakdown on the futures charts, because they're just simply a lot cleaner than the CFD charts. That's how I would like to trade as well. So we did get that nice clean bounce to the upside. We did actually see price action push up. And then again, I was still looking for the shorts. So in a situation where you see price action is like this, you have to identify when to stop looking and being married to one side of the bias. So if you're in a situation where you're constantly looking for longs, you're looking to validate longs, you're looking to continue to get in on longs, if you see a situation where price action is at an area of support, it's at a key level, and then you actually see price action come back down into this structure zone, into this key level, and break below it, there's a greater probability that you're going to see price action continue to the downside. And then you just simply have to ask yourself, it's like, okay, well, if price action does break below this previous structure low, if we do break above support and support doesn't hold, and we see new selling stepping in below support, where is there a good probability that price action can actually go down to? So when I was actually looking at this and looking for that potential to get in on short, the first area that I was looking for price action to come down to was a quick scalp, was this previous area of structure. Because again, there's a higher probability that price action is going to come and hit this area of previous resistance than all the way down here, this area of support. Then second, I was looking for price action to come down into the open, which is why I have this marked off, because this is the open low. And then third, I was looking for price action to come down into this major key level. So the way I would actually have this structured is, okay, well, we have the break structured. We have price break below this previous key level. If I'm going to be taking the shorts, I'm going to be looking to target this area first for a quick scalp. I'm going to be looking to take profit over here for TP2, which is going to be the open low, and then TP3 is going to be all the way down here at 53.10. But today was another day where I kind of overtraded a little bit. Like I said previously, ended up taking buys over here, and then ended up taking some shorts, and I ended up making some pretty good money on the day today. Ended up going and taking my first short at a break of the low over here, which is a breakout setup that I normally have. For those of you guys that are in the day trading institution, you guys already know how I like to trade the break of the lows. So in this situation here, once price action closed and started to break under our structured low and close under support, I ended up executing myself on a short with the stop loss just slightly above this area of resistance, because the thing with the breakout setups is I'm looking for price action and volume to push in my favor, or at least to push price in my favor almost right away. And if it doesn't do that, there's a greater probability that I'm wrong, and I want to cut that loser as short as possible. And again, for a break of the low setup, I'm only looking for like a 1 to a 1 or 1.5 R multiple. So when it comes to those setups, they're really just really quick setups, which is why I held this position all the way down to the targets, and that was it. Price action then pulled all the way back into the structure zone, which is the previous zone that I just took that break of the low setup from, which is also the same exact key level that I have taken the previous bounce play from and the break of the low setup from. So this was like the major zone of the day. Price action pulled all the way back, gave me the first rejection. I saw new aggressive selling step in at this area of resistance, and then this candlestick closed back under. What I really wanted to see was price action maintain itself below the 340s, because that's where we had a little bit of an imbalance, and I wanted to actually see price action break below that, and I wanted to see sellers hold under that imbalance. So when price action started to come back down, I executed myself on another short. Now this setup was a little bit different. This setup, I ended up looking at something like this, where I was executed short right under the 340s. Stop loss was right above this high, and I was looking for price action overall to come down into the 53.10s, which I knew I was going to have a positive R multiple regardless. Now, price action ended up dumping past my first take profit again, because again, we don't know if price action is going to break below this area. Price action could potentially reject and come back up in this range, and I want to close my position before then, because I don't want to be holding a losing position for very long. The one thing that I see in a common repetition that I see with newer traders and traders who may join the one-on-ones or our first call is that they hold their losers for very long but can't hold their winners for anything. So to kind of wrap this up, so when I was looking at this area over here after price action broke the low, so you want to take into consideration, not only do we have a break of structure to the downside where this was our previous higher low point before price came up, made a high, which made a lower high point, and then price came down and made a lower low. So we've kind of entered like that 3-leg extension territory. We've kind of already entered that bearish market, or that bearish market structure territory here on the 3-minute time, or on the 1-minute time frame, which the one thing I want to keep you guys in mind, I was mainly looking for shorts. Why? Because the daily time frame is still bearish. There's no real sign to start looking to buy this market unless like you're spot trading and you're long-term investing and you're looking for good discounts to dollar cost average into. That's a completely different story, right? But right now, from a technical standpoint, this market is still bearish. So then, you know, the daily time frame is still bearish. The 4-hour time frame is pulled up into a major key level that we've already seen price action reject in the past. It's not like I'm taking shorts at a complete counter trend. That's not the case. I'm using the higher time frame trends and looking for continuations of those higher time frame trends on the lower time frames. And then there's sometimes where I do take those counter trend setups when they're valid, but I'm not married to those counter trend setups. Like I told you guys previously, I knew that if price action were to break under this structure zone, if price action were to break into this key level, there's a greater probability that price action is going to continue to go down because the overall trend is bearish, which we could see that happen throughout the rest of the day. Not only did price action go down, it just completely died and took out these previous lows and has made new lows on this bearish trend. So to kind of wrap everything up with this specific trade, I ended up actually getting out a little bit early when price action started to come back above this area for a roughly a 1.5 or multiple, because I didn't want to actually hold this position for very long either, as I had already started kind of getting into like that overtrending phase, and that was kind of like the last trade I ended up taking on the day, which just was a lot better of a trade than the trades that I took over here. So that's going to summarize the video, guys. I'm going to keep you guys updated with this account and how it goes, and just, you know, try and be as transparent as possible with these types of trades that I'm taking. But I wanted to give you guys a quick rundown on how I've been trading this and how I like to trade very aggressively. I'm not really married into a lot of these bigger trades because I'm not trying to hold these positions for very long, because the longer you hold the position, the more open to risk you're going to be. I mean, you could just imagine the person that went short on this key level had the same exact setup, was targeting this area down here. Price action completely went up. Were they wrong in direction in the long term? No, because price action ultimately went and continued to go down. But that doesn't necessarily matter. What matters is if they made money. And in these situations, like when you're married to these trades, you're not really going to be making money if you're breaking even all the time and you're not securing profits. And again, when you have the signs that price action, there's a good chance you could see that reversal, or price action could come up where the probabilities of your trade change, and you ignore those signs, and that's where you're going to start running into issues. So I've been really working on not ignoring those signs and securing more profits, because the issue that I had 2 years ago when I was having those huge days, there were like big swing trades. I was reaching maybe like 20-30 grand on some of those trades, and I was catching, you know, 3-4 multiples, which would result in those $100,000 days. And then the problem is I kept leading and having that mindset moving into the future, and the market conditions changed, and it took me a little bit to actually adapt. I had a lot more break-even trades, and I had a lot of trades where I would be up $20,000-$30,000 and then I end up breaking even. So nowadays, what I'm really just trying to do and focus on is just really just hit those base hits, and then if I can catch a home run trade in the process, then fantastic. But other than that, everybody, I'll talk to you guys in the next video. If you guys want access to my free course, I'll have a link down in the description. And also, if you want to work with me on a one-on-one basis, I'll also have a link down in the description there. And you guys can join the free Telegram, because I'll always be dropping breakdowns on the free Telegram, which again, the link will be in the description. So hope you guys enjoy this video, gain some value from it, and also show you guys my results as well. So I'll talk to you guys in the next one.